Hello and welcome to the Wendell Effect Chart School. This is Brandon Wendell back with you again, and I got a quick little video for you about a trading strategy I've been teaching for many years. A lot of success with this strategy. There's no guarantees obviously with it, and you got to put a little bit of work into it, make sure you get it down, but we'll go ahead and jump right into it. Before we do, just reminding you that the Trading Mindset organization nor of its personnel, registered broker-dealers, or investment advisors look at this information from an educational standpoint, not telling you to buy or hold anything in particular. And past performance is no indication of future results, and we're not subject to trade restrictions, so we can have position security initiate one at a time. If you want to stay in touch with me, please shoot me an email at brandonwendell.cmt@gmail.com. Best way to get a hold of me there. You can also catch me on Twitter at TraderBdub, and you can also search for us on YouTube at The Wendell Effect and The Wendell Effect Chart School. So, that being said, we're going to jump into Chart School for this week. As I mentioned, I got a little known strategy for you, and hopefully you'll enjoy this one. It is called the Novice Shakeout, and this is a strategy that, as I said before, I've been utilizing for quite some time. It's not one of my best strategies, but it is one that is one in my repertoire that has been pretty successful for pretty much any market and any time frame. So you can definitely use it pretty much anywhere. As I mentioned in my past videos, I've worked in multiple countries: England, Singapore, India, as well as the United States, and even Jakarta, Indonesia. So I've applied these techniques to all those different markets, and they work the same, charts to charts. So jumping into this strategy, let's just, the problem with many novices is they're often wrong. And there's a lot of garbage out there on the internet, as well as in books and even on television. And most of these formats tell you about trading breakouts, and they say, oh, you gotta trade these breakouts. Well, the problem is that most of these breakouts tend to fail. I usually wait for a retest before I trade a breakout. I get a breakout, the retest, then I enter, and those tend to work out much better. But if you happen to know the strategies, well, if you can see where the novices are jumping in at the wrong spot, all you have to do is take advantage of those novices by doing the opposite, or adjusting your strategy to trade with the professionals against the novices. So, speaking of this strategy, again, we're taking advantage of the novices, unfortunately, but what people are taught is to watch these charts, and if you see an area like this where prices are bouncing off an area multiple times, that's usually referred to as an area of support. Okay, and if you've watched me trade, I don't use support and resistance. I use supply and demand, but that's another video which you can have access to. All you have to do is look for the supply and demand video in the Wendell Effect Chart School. Anyway, many people have also read that when that price breaks down from that support level now becomes future resistance. And that is not entirely true, actually. That's not really where you're supposed to be entering. So that's part of the problem, is a lot of people will sell short immediately on that breakdown, or if they don't sell on the breakdown, they'll wait for prices to retest, and that resistance now is where they start selling. That's traditional technical analysis. They say, okay, sell the breakdown or sell the retest, and make sure you place your stop loss above that resistance level. So you have a small stop there, a little bit of risk. Well, the problem is, if all these big institutions with hundreds of millions of dollars and billions of dollars at their disposal know there's a whole bunch of stop losses right above that level, they're more than likely going to run that stop and stop all those people out. And that happens so often. So you got to make sure you don't chase or do this particular strategy, because it's a losing strategy. It just doesn't seem to work very well. So if you put your stop above that entry, next thing you know, price is going in your favor, but without you. Yeah, that's right. Prices tend to move further and faster with the least amount of people on board. Once everybody who wanted to get in gets in, prices can't keep going. You need buyers or sellers to propel that price. So if we shake all those novices out and buy or sell at the right spot, now those people will be chasing after it goes in their favor once they've been stopped out, and that's going to help the professionals who are already in at a better price. So, if we take a look at some of these, so-called educational videos, I actually did a little research and found a couple of websites that were saying, oh, you got to buy the breakout of resistance. Well, that's a trap. Here you can see there's a resistance level. I took this from a particular company that was teaching it, and they're telling you to buy on that breakout. This one didn't even work. Look how deep it pulled back before it ended up hitting their target anyway. So, you can see they're telling you, okay, go ahead and buy the breakout, place your stop loss below that breakout. Or if there's a breakdown of support, they're telling you to enter on that breakdown of the support and target something lower, but often prices will pull back, as I showed you, shake you out first. So again, there's the breakdown, there's the retest. It's all from the same brokerage and same website, which I'm not going to mention right now. Anyway, you don't want to follow that. What we need to do first is identify the novices. Okay, so we have the Novice Shakeout, and you can see right there, novices are selling that breakdown. There's a volume jump typically. So we're going to see a couple of typical things. Number one, you're going to be noticing that the novice candle is usually a much larger candle in the same direction that trend was already moving. It typically happens at a breakout point, either a breakdown to a new low or a breakout to a new high. And it's usually accompanied by a spike or high volume as well. Okay? So we're going to be patient. And you can see, because in this case, prices pulled back, shaking out all those people that jumped in on that breakdown before they kept going lower. So we have to figure out, okay, exactly where are we really supposed to be getting in and how are we supposed to be trading this? Well, first we got to identify the novice candle. As I mentioned, it's normally a larger ranged candle. So we're looking at the high and low, not necessarily a big body of the candle, but a big difference between the high and the low. It's usually going to happen at a breakout to a new high or a breakdown to a new low, and it should be accompanied with high volume, a volume spike, as I said. That's the novices all kind of rushing in together. So when you see that, that's your novice candle. Now, trading the novice candle, or the novice shakeout as I like to call it, basically we're going to identify that candle first, as I mentioned, large range candle, same direction we're already traveling, usually a breakout of a new high to a new low, and accompanied by high volume. Okay, if we have that, then what we're going to do is make sure we're trading in the direction of the intermediate time frame trend. Okay, and this is something I teach in a lot of my classes. I always make sure I look at a minimum of 3 different time frames when I'm trading, and look forward to a new video coming out pretty soon on Chart School where I'll talk about those multiple time frames and how to trade those. But you want to make sure that that trade time frame that you're on, the next bigger time frame trend is in your favor, and you got to make sure you're not at the top of the bottom of the trend. That's called the field of play. That's the bigger perspective time frame that tells you where you're going to reverse. So again, that's for another video, but make sure you're not at the end of the move that's likely to happen. Now, in order to enter the trade, we're going to have to be patient. We're going to wait for all those novices to rush in, and we're going to wait for them to be flushed out as prices retreat. Usually, the best place to enter is not the breakout point or the retest of the breakout. It's actually the retracement to the beginning of the novice candle, the open of the novice candle. So if it's a green candle, you will basically enter at the open, which is the bottom of the body of the green candle. If it is the breakdown with a red candle, you're going to enter at the top of the body of the red candle. That's the beginning of that candle in the breakdown. So that's your entry. Your stop loss, I usually just take whatever time frame I'm trading on and use one average true range beyond my entry. Okay, so if I enter on, say, a 5-minute time frame, I use the ATR for the 5-minute. If I enter on a daily chart, I'd use the daily ATR and put that one ATR away for my stop. My target's simply going to be my next zone, trading the normal trend, or if you're doing a day trade on stocks, particularly, I get out before the end of the day. If it's energy markets, I would get out at the close of that regular trading hour session. So that's it. Pretty simple strategy, really. So we'll take a look at this. You can see this was eBay on a trade I did many, many years ago, actually, but it works the same as it does now. You can see that we had a price breakout. There were actually quite a few large candles, but this one happened to be the breakout of the high of the day. And that happened early in the morning on this 15-minute chart. We were actually 45 minutes into the trading day. We got our little reversal there, came back to the beginning of that candle. The average range basically didn't stop us out. We put it at 17 cents. This came down from the entry less than 20 cents, less than 17 cents. And we were able to get out by the end of the day for a nice profit. That's it. Keep it simple. Okay. Obviously, for this to work best, if I'm on a 15-minute chart, the hourly trend should be in my favor, and there shouldn't be any supply from, say, the 4-hour or daily time frame in front of me, because that could end the trend. So, taking another look around, again, right here, we got Crude Oil Futures as an example, and this one was actually pretty recent. This was only a couple days ago. You can see broke out of a prior high. I'm in the November contract there. Broke out, had a little bit of a pullback, and when we pulled back to the beginning of the novice candle right there, that larger candle, notice it wasn't a spike in volume, but it was a much higher volume candle than all the other ones around it. It was actually even before the regular trading hour began. The regular trading hour began on this candle, and that's where you see the big spike in volume, the pullback where our entry was. My stop loss was at 55 cents from my entry, which is where we were for the average true range. It's kind of covered up right there. And profits were made as prices ran up. It's a simple strategy. Now here's another example of the euro versus US dollar. Obviously we won't have volume when it comes to the currency markets, but you can trade this with Forex. Here you see a large red candle, very large compared to the ones around it, already in a downward move, breaking out to a fresh low. So they're getting in. Prices pulled back to the open of that red candle. That's where you could sell short, placing the stop 1 ATR above on the time frame you're trading. This happened to be a 4-hour chart, and it just kept going down until the target. As a matter of fact, the best entry was another novice candle. Unfortunately, this one didn't come back all the way to the beginning of that, but often when you get another novice candle in the sequence, it could be the end of the trend. You saw, well, we pretty much had one right there too, trying to break the low of that novice candle, which came back a little bit, not all the way back. Another example here, again, novices trading that breakout. You see, we actually broke down on this candle. Notice the big spike in volume again. This was on the Russell 2000, and it didn't have a large body, but it was a large range candle breaking down with the spike in volume. Price comes back to the open of that candle. You sell with your stop 1 ATR above. And once again, the novices came in at the end there. That happened to be the end of the trade. Often when you get that second or third novice candle, it's the end of the move. So you want to be out for that as well. Another example right here on the QQQ, we have a nice little breakout again, a novice candle. Didn't have a huge spike in volume at all, but it worked. You can see we pulled back, not right away, but a little bit later, pulled back to the beginning of that novice candle, the green body, the open at the bottom there. Entry for the long, 1 ATR below for the stop, and just keep running it up until the market tells you to get out. In this case, another jump in volume, kind of capitulation there. Went a little bit higher, but that's okay if you got out here. Got out before it turned around. Another example on Ethereum. Oh my goodness, this can work on crypto as well. It works on pretty much everything. As you can see on crypto here, this is back in October of last year. Had a nice breakout on the daily chart, I think it was. Yep, daily chart on Ethereum, breaking out to a new high. That large candle, there's your pullback to get you in at the open of that candle. Took a little heat, but not enough to really worry you if you had the ATR. And prices rallied. So this can pretty much work on any market, any security. If you got more questions about it, go ahead and review what I put and in the information there. And if you also have additional questions, you can email me, as I mentioned before, at brandonwendell.cmt@gmail.com. Catch me on Twitter at TraderBDub, and you can search for the Wendell Effect in Chart School as well online. So hope you enjoyed this edition of Chart School with the Novice Shakeout or Novice Candle. Until next time, trade safe, trade well, and take care, everybody.